Hey everyone, so I want to talk about why I think the ETA pathway is a superior method to the startup pathway. So ETA, that means entrepreneur through acquisition. So essentially you're finding a good business, you buy that business, you run the business. Normally the idea is that the owner of the business is looking to retire after maybe a decade or two of very hard work. A lot of blood, sweat and tears have gone into that business, but it needs to go on to the next person. They don't have any children who are going to take it over. Plus this is essentially going to be their retirement money as well that they're looking for. So they try to sell the business. And this is a big trend that's happening through Western civilizations with the boomer age group sort of hitting retirement right now. I did this personally. So I have bought a business from a retiring owner. It was almost exactly 12 months ago now. So I have gone down this pathway, this ETA pathway. Now, why is this better than attempting a startup for your own idea? Well, ETA in buying somebody else's business is not without its own risks, but startups, I think, 85% of startups fail within the first 2 years. I think they only get to, like 1% of all businesses only get to 10 years in the first place. And also with startups, I don't know if you've ever done a startup, but you lose momentum, you get distracted by another idea because you don't have cash flow coming through immediately. It takes a lot of time to get revenue and cash flow and stable clients and any sort of stability that it's very easy to mentally just move on to something else. I have done a startup as well. So this is why I wanted to talk about this, is I've done both now. So I did the startup path. Took me 5 months to make the first sale. I was selling fitness equipment online, using mostly Amazon to do that. This is a very common direction that people go now. But this was a decade ago, almost more than a decade ago, 11 years ago now, that I went down that path. So it was really early in the online e-commerce world. But it still took me 5 months to get a sale. It took me 18 months before I took any money out of the business for myself. So I was 18 months without any money coming in whatsoever. The risks were high. I was putting significant amount of money into products that were getting sitting on ships out of my control. I remember one shipment that I made. It was essentially a faulty product, and I couldn't tell that it was a faulty product being not on the ground in China where this stuff was getting made. It got over to America and people started to sell, but people were complaining about this thing doesn't work, it's broken, and getting returns. And I ended up having to dispose of this entire shipping container worth of stock. It cost me something like $25,000, but then the opportunity cost of that it should have been invested into a better product. Or anyway, there's some serious risk involved with a startup, mine included, but you can imagine the risks involved with any startup are quite significant. So the failure rate is just so much lower if you're going into a business that has already got through that first decade. That's an amazing head start you're going to get on your entrepreneurial journey. Plus you get to go from, I think the cool thing about the ETA pathway as well is you could go up the corporate ladder and you could start, I don't know, at the bottom, slowly work your way up in terms of some sort of managerial position. You're always going to have bosses. You're always going to have people telling you what to do and having rules and compliance things that you have to worry about and all this stuff. You still have to worry about a lot of those things as a business owner too, but at least you're in control of your day. You get to decide what you need to do today and what you're going to do next week and what the strategies are, and you're a lot more in control. You get to essentially walk into a CEO role immediately, which I think is a pretty attractive path for someone like myself. Now, like I said, with buying that business, you're going down this ETA path, you get that cash flow immediately, you get a client list that are already used to purchasing through that business, you get hopefully good processes, and you get a lot of mistakes that have already been learnt by the previous owner, and they've learnt from them and then adjusted things, and then they're they've kind of solved a lot of the problems, or they've made the mistakes already. So you get to accelerate your learning as well. I think that's a really bit of a hidden reason why ETA is a great way to speed up, I think, wealth creation as a whole. Now, the argument against is that the startups would have a bigger upside. Now, I think, well, yes and no. Now, we all obviously know about Zuckerberg and Bezos from Amazon, who hit these startups out of the park to multiple billions of dollars. It was revolutionary and brilliant. And what are the chances you're going to be revolutionary and brilliant? I think it's pretty unlikely that you're going to be able to pull that off. So, and statistically, I think the odds are not in your favor. So that's an edge case to make those billions of dollars. But in the ETA world, you can actually make big money as well. So you can turn these stable businesses that you buy, you learn, you take a few years, then start expanding through smart operating, good hiring, having a good plan in place, potentially making more acquisitions, and going from a local company to a national company, then exiting to private equity for hundreds of millions of dollars. That playbook has been done before, and it's been done many times before, and it's a pretty exciting opportunity for a lot of people to make big money out of a small acquisition. So again, starting with that good cash flow is really key. That's just such an advantage. Product market fit already exists. You've got clients. You can build on something rather than having to figure everything out from square one. Now, another downside of going the ETA path is buying a business is going to cost some serious money. So you're going to probably have to get a loan of some kind. You're going to have to borrow money of some kind. That's unfortunately the path. Whereas I can understand the startup, you might be able to bootstrap that and not have to borrow anyone else's money for anything. Therefore, it's easier potentially to go down that path, I think. But on the other side, you can get quite creative with the financing options in the ETA world. So instead of paying for everything up front, so let's say it was $1 million acquisition, you don't have to pay $1 million on day one. So you can actually negotiate a lot of what's called seller financing. It's essentially paying some of the money up front and then paying the rest over a period of time, which, while it's a period of time, you're accumulating profits in that business and you're using that to then pay back the owner. So the business funds itself in a weird way. Not completely. You're going to have some money down most of the time. You might hear of some deals if you go down this pathway of no money down, and there's some really creative potential ways to not pay anything and still buy a business. I think that's a little bit more fairy dust than it is reality. I think it's not saying it can't be done, it can, but really good businesses, you're not going to be able to do that. They know their worth. They know that they're going to have multiple people wanting to buy that business. So yeah, you get what you pay for a little bit. If you're paying no money down for a business, and you might not be buying a great thing. So the other cool thing about the private market world is that the multiples on these are really attractive. So compared to investing in the stock market, like I use my interactive brokers for that. That's what would be the slow part of my investment portfolio. So I've got my business that I currently run, profits that I'm taking from that. A lot of that is going into my interactive brokers account. There's actually a link in the description if you want to get an interactive brokers account. That's for public markets. Now, in that public market world, the stock market, we're talking PE ratios of what, 15, 20, 30 times their earnings to buy that company. Where in the private markets world, you can do so for 2.5, 3, up to 6 times their profit. So compare that to the 20 or 30 times in the stock market. The huge amount of effort that you have to put into this and the work that's involved, but there is greater return. Again, another attractive part of the whole buying your own private business. So overall, I think this ETA career direction, it's amazing. Something that suits me really well. And if you were thinking of going out on your own, I think this pathway, I think, is one of the best. I think it beats the startup world. But yeah, interested to hear what others out there think. If you want to talk to me about the ETA world and making acquisitions in the private market space, Discord is where I talk with people for that. Again, link in the description for that. Otherwise, I hope you enjoyed this. Happy to talk a lot more about this in the future, but I'll leave it there for now. All right, thanks.